Achieving your goals and dreams requires a lot of perseverance and commitment. After all, it involves specifically mapping your financial goals and then managing your finances to achieve those goals. And we're here to help you do just that. Hello and welcome to NSE FinWiz, powered by CNBC TV 18. I'm your host, Gautam Srinivasan, and today we are at the offices, or rather the headquarters, of one of India's biggest retail giants, the Future Group. Let me start with you, Mehrab, here. Now, savings and investments both have value for different reasons and purposes. So, could you outline the key difference here? It's not like one is exclusive and not required at all. So, could you outline that difference for our audience today?
Saving and investment are two distinct functions. I think saving is just the beginning. Whatever salary or whatever income we have to save a certain portion of that. But once we save that, I think the next step is to invest. Unless we profitably invest, we are not going to reach anywhere. And if long term we just remain savers, then in the long term I think savers would be strict. I think saving has to be a compulsory thing. Unless it becomes that, I think it will be very difficult for you to save. So at least save minimum 20% of your salary. Also, when you do goal planning, you have different short-term, medium-term and long-term goals. So accordingly, you bifurcate your saving and investment between your different goals, so that at different points of time in your life, you are able to meet those goals with your available and accumulated funds and investments.
That's an important.
I would like to say one thing, that you should not confuse insurance with investments. I think both are very separate things. Insurance covers your risk, while investments help you to grow your capital. So everybody should take an insurance policy. I think each and everyone should take a proper insurance policy, and the best answer is the term policy.
All right, our final question for this segment comes now. In the first segment, we discussed savings versus investments. In this segment, we'll be dwelling into the aspects of financial planning and goal setting towards savings and investment. Made some people think as well, because earlier real estate used to be the favorite play. Now the question becomes, if I liquidate my real estate portfolio, there is always the long-term capital gains tax factor there. But there are ways to, kind of mitigate the tax implication there and bring a non-liquid investment into fairly liquid investments. What would you say, what would you advise to the audience on that, if they want to shift from a real estate portfolio to a more liquid portfolio, and how can they do that saving taxes?
There are some options when you sell real estate. There are some provisions when you can save tax also, but most of them are, I think, again, investing back in something like real estate or some kind of a bonds. But equities are obviously, as Kalpesh very rightly said, that they give very tax efficient long-term returns, because they help you to participate in the growth of the economy. So when you invest in an equity, you are investing in a business, you are participating in the growth. So I think it's very important to invest for the long terms.
All right. And before I toss to the audience, I'd like to get your view, Mehrab, on one of the most important long-term goals, which is retirement. What should be the balance of savings and investments when approaching that long-term goal, which is, say, having a retirement fund? Yeah,
clearly when you are beginning at, say, 25 or 30 years, you are planning for the next 25 to 30 years. So clearly in the initial stage, it has to be maximum portion into equities, because longer-term equities are no doubt the best asset class, which will give you growth with maximum tax benefits. But as you slowly move towards your retirement, towards your goal, then slowly I think you have to shift out of equities into more stable. First you shift a certain portion into balanced funds, and slowly you shift into more liquid, more safer assets, and safer in the sense less volatile assets. There is a difference between safety and volatility. Equity may be volatile in the short term, but very safe and the best investment in the long term, because it will help you beat inflation with tax breaks.
All right.
Is that I would like to start up, maybe build a corpus fund 10 years from now at a saving of about 50,000 per month.
So you want to accumulate about 30 lakhs, and you've got your saving power on a monthly basis is around 50,000.
Including all.
And I think with 50,000 per month of savings, if you do in a proper equity and growth fund, I think you will be able to achieve much more than what you are planning to do. So even at a 10 to 12% conservative rate of return after tax, I think the corpus will be much higher. So I think since 10 years is a decent time, it can be classified as a long-term growth, and this you are planning for your future business or startup, whatever, as you said. So I think maximum portion just now you should invest in equity and equity-related mutual funds and products. Once you are closer to your goal, say around 8 to 9 years from now, then slowly you can shift that towards fixed deposits or liquid funds, which are much lesser volatility and offer better.
The session made me more aware about various options of investing, how to invest and where to invest. in the future, I'd really like to go on and explore such options.
We got very valuable insights from the financial experts today on the dais. These insights are especially important for the common man like me, who does not, get in-depth financial advice usually or in a day-to-day life.
It was a fabulous session. Like, there were a few points which were being brought up for a discussion, where it spoke about long-term, short-term planning in terms of your investment. It did help me. It gave me a lot of insight about how to plan my investment and go ahead with it, depending on my age, depending on my long-term or short-term goal which I'm putting up for myself.